Hello guys, LITFX here. I'm so excited bringing yet another video to you. My process on how I took New Zealand USD on Monday, which I saw the trade was a good one and I took the trade. All right, let me analyze what I saw and how you could take yours in the future, what I see and how I take it. All right, so coming on Monday, I saw this trade, this down. I took this trade here. Coming on Monday to the chart, I saw I had a market breakdown. All right, it was inside. So as I told you previously, this is what I do. I get to the market, I mark my high of the previous day. Here we are. Here's my high and here's my low. Okay, why do I mark these highs and lows of the week, of the day, of the session, of the month? Because each time the market gets and breaks those highs, those are points of spot stop hunts. Okay, those are where there are a lot of stop loss at those particular areas, lot of trades at those particular areas. Those who took trades up here, they'll put their stop loss here and there, and those breakout traders like here, they'll do breakout traders who took this trade here, they put their stop down here. That's why the market weaks and gets back and continues in its opposite, continue in its move. So getting into the market on Monday, I marked out my high and my low, waiting for either one of them to break. But when I got to the market, London did not give me anything much more concrete, so I waited. London was finished, and anyway, but this would have been another beautiful trade here. We have a one push, two push, three pushes to the high, but did not break the previous day's high. It gave us an bearish harami pattern with a doji and an engulfment. This would have been a good trade here, like this. You put your target here, then you ride it on 1 to 2. This already 1 to 3 here. Then now it gave us a 1 to 5. All right, so I didn't take the trade, but that was a beautiful trade on the 15-minute time frame on New Zealand USD. So coming on the New York, I saw a market breaking down. All right, breaking down, and it pauses here. It consolidates here. We have a consolidation there. We have this consolidation here, and the market continues to break down, breaking Asian's low, which is okay. It calls my attention to look into the market. It breaks it down. Then what do I see on the 15-minute? I see a 1, 2, 3, 4, then bearish harami pattern with another bearish candle, and this is what I call W pattern. There are either two ways you can call this. This is a W pattern, like one. This is a W. It should be candles with different variations. Okay, a sell, a buy, a sell, a buy. All right, this is a W pattern, which is also called what? It's also called and before I forget, this is also a type 1 W pattern. Okay, type 1 W pattern. Happening type 1 happens below the Asian range, and this is our Asian range. It happens below. Type 2 happens just below, at the low of the Asian range here. Let me just draw it here. Happens here, and type 3 happens at the center, midway. Okay, so those are the types of W patterns we have. Okay, another idea I want to tell you is this. All right, this is a type of W with 4 candles only, right? And there's another type of W with many candles separated. Like for example, let me show you here. This is a W pattern as well. Okay, and it could also be W pattern like this. All right, yeah, this is a W pattern, type of W pattern, and this another type of W pattern. We separated like double bottom, like for example here and here. Okay, here and here. This is double bottom. Okay, so like here, what am I doing? Like this. Okay, that's a double bottom, so you can still use it as a W, but this also is validated as a W. Double V. No, but not W. Okay, W. All right, so that is it, and those are the types you can check online. There's type 1, type 2, and type 3 W patterns. All right, so I took my trade here. I should have waited it to get here, but I was like, nah, maybe it could just leave from here. I should have just waited. So I take it at the 75, the quarter level here. So, but I took my trade here, then I put my stop loss here. So, and that was it. This is my 1 to 2, but I was expecting it to break this, because this week I see more of buys. This week I see more of buys on New Zealand USD. I see more of buys on New Zealand USD. So as you can see, I was expecting it to come. If I've left this trade, you see, it would have been a very, very beautiful trade, and it went much more further. But what happened is, after it got me this is what I did. I went break even. Okay, going break even, what happens is, it came back, took me out here, it took me out. Then at Asian, it gave another beautiful setup. 1, 2, 3, like this. This is another beautiful setup here. This is another beautiful setup here. Okay, look at this, man. And what helped me to take this trade here, you can go and do that as your own assignment. What helped me to take this trade was divergence with AU, EURUSD, Australian USD, Aussie dollar. Okay, that's what prompted me to take this trade. Since I don't trade on Monday, I put the trade, then I went to bed, got up, and that was what happened. All right, so guys, that's it. Simplicity is the key. Keep it simple. Plan your trade your plan, and make sure that everything is in line. Your emotion, your risk management, and pull anytime you see your setup. Okay, so that's it for today, guys. Today I didn't take any trade because I had problems with my network and I could not look at the chart today, but hopefully tomorrow or after the day after tomorrow, we are going to have some beautiful trade if the market gives us that opportunity. Okay, so be careful, guys, be careful, and let the market go with you. Peace.